Hey, everybody. Welcome to the morning market briefing. It's Wednesday, August 26, 2026, hump day. How we doing, boys?
Man, so much to cover.
We got a fun one today. We're going to open up with the once and former king, as he was called by Dan Gilbert, owner of the Cleveland Cavs, LeBron James. LeBron James.
I mean, there's a lot of interesting, honestly, debt and financial machination stuff going on with the sale of the Lakers. But I think the most interesting one, and the people want to hear about, is LeBron James borrowed $300 million against his future earnings.
Yep.
That is in the portfolio of what is listed as two Midwestern life insurance companies.
Advised by Guggenheim Partners.
Which is
affiliated with the owner of the Lakers.
Who now is being investigated for financial fraud. And that seems to be the reason he's selling, is because he seems to have made he's over-levered himself. And it's just an interesting thing, because you wonder, if you're an insurance company and you're buying these bonds and they're based on the future earnings of LeBron James, that seems like a very safe investment. But the problem is, there's really a number of questions. One, why does LeBron James need $300 million?
That's what I can't figure out. So he borrowed $300 million in 2018. And I understand that people will undoubtedly make the argument that, well, he borrowed at, 4.9%? Mm-hmm. He borrowed at 4.9%. He can out-earn that. Okay, I get it. But, the guy's worth $1 billion outside of this loan.
Was he not saving any money?
What did he need $300 million? So I looked it up, and I was like, okay, maybe because he has the I Promise school in Akron, Ohio, the charter school that he started. I was like, maybe he used that. And then you really think about it, you're like, $300 million to build a school is absolutely ridiculous. He certainly did not spend $300 million on it. I think it runs on an operating annual budget of $8 million, much of which is now taxpayer funded. So he didn't use it for that.
And why would you mortgage your future earnings to do that?
He owns plenty of real estate. But again, this is a guy that's, made $50 million plus a year between his contracts. He had an investment in Beats by Dre that was worth, when it got bought by Apple, he got tens of millions of dollars. He's got a lifetime contract with Nike. I don't know where the $300 million went. Maybe it's just in IVB, or it's just sitting in the stock market. But he borrowed $300 million, which is pretty wild. The bonds are due in 2049. And they were basically structured to say, hey, here's immediate cash, and this is backed by your lifetime deal with Nike. I don't know the terms of that deal. How do they define lifetime? If he Kobe's, what happens?
Yeah, the question is, if he gets hit by a bus, or hypothetically,
does Nike keep paying him?
Yeah, I mean, I assume his estate would continue to get royalties
for some finite period of time beyond his death.
Yeah,
it's they probably have. I mean, as a life insurance company, you probably have life insurance on him. But I don't know.
It's there was I recall that I was playing a team trivia game. The question was who are the top 10 earning authors the previous year? And it's the guy who wrote The Girl with the Dragon Tattoo, who has been deceased for 15 years, continues to be in the top 10.
Nice.
So it's Michael Jackson probably still cranking out some cash somehow. I mean, he does own the Beatles discography. So it's just an interesting thing, but you wonder, that seems dicey. And it just goes to show, I mean, we talk endlessly about how big the bond market is. There are bonds that back things that you wouldn't even think about. And one of them would be
LeBron James.
Yeah. Now the question comes, does LeBron James pull a Scott Bessent? Because in theory, 4.9 would have been a high interest rate when he got these bonds in 2019. They have now priced down.
Yeah,
certainly.
He should buy them back.
Yeah, so the question is, does he take that $300 million and pay $250 million to buy back those bonds and retire them and net $50 million?
And if he does, should he be the next Treasury Secretary?
Yeah, I mean, now, if he does it, it's a great idea. If Scott Bessent does it, he's just a horrible, horrible financial terrorist who's trying to bankrupt the United States somehow by making the United States money. But I digress.
I just want to know where the money went. I'm so curious. To be clear, I hate LeBron James.
Same.
But I'm not implying that something nefarious happened. I'm just genuinely curious where the money went, what he did with it.
Yeah, I mean, what did he spend it on?
Who came to him and were like, hey, King, Your Honor, you're actually quite strapped for cash. you're making $100 million a year between endorsements and basketball, but you are really strapped for cash. You need to get $300 million now, and here's how we're going to do it. Whose idea was? How did this happen?
Like, how much cash does he need? I just don't understand it.
It's pretty wild, and then it's just sitting in the portfolio. I think the bonds are probably fine. Like,
Yeah, I mean, there's certainly for the time being, but it's just tough because does he have life insurance? Like, if he gets is it because that would cost money too?
Yeah, does Guggenheim turn around and write a $300 million term life policy that runs till 2049? And if so, what's the cost of that?
And whose life is that backed by? Like, like what are the bonds in that portfolio, and are they dicey and related to somebody else's future earnings?
I mean, the whole thing's wild. I mean, the story continues to get crazier. We probably could do a long form on the financial situation surrounding the Lakers.
Yeah, and maybe
and the Dodgers.
I would definitely get numbies for sure.
But I don't know. We don't own any LeBron's, do we?
Not that I'm aware of. No.
Yeah. So
we need the insurance companies to be identified. But Midwestern, I'm thinking Mutual of Omaha, perhaps Cincinnati Financial, which is in Cincinnati.
They're not. They're two small ones that I hadn't heard of before. They're like Wisconsin Independent Life Insurance and. But the question then becomes is who's reinsuring these guys as well.
It seems so risky for a small company to do that.
Yeah. I mean, I think they were basically hat in hand to Guggenheim, and Guggenheim said, you're going to do this. And
we're going to collateralize LeBron.
Yeah. And they said, this is a massive opportunity for us to get easy growth. No one else is doing this, so we're going to do this.
Crazy. What a world we live in.
It's really wild. Let's talk about the equity markets more broadly. We're seeing some bottlenecks spin and some AI disruption. Intuit down 12%, Zoom down 6%, Heiko up 2%. Nice little beat there.
Yeah, it's pretty much kind of what we would have expected. There's bottlenecks in the aircraft supply parts space. So you're going to have a lot of OEMs that are stressed on giving new parts to their customers. And so Heiko can step in and basically charge what they want. So they're benefiting from that. And then on the AI side, Intuit's getting disrupted. TurboTax, they push pricing too much. And now TurboTax is going to grow instead of 8 to 10%, 2 to 3%. They're also even seeing some weakening in QuickBooks business. It's nascent, but it certainly undershot what people wanted to see. So Intuit's struggling. They've been struggling, and I think this is just going to – and then the kind of Zoom is the same thing. And I think that this is going to just perpetuate this idea of software is going to continue to be volatile. It's going to be the new value stock sector of the S&P 500, and I think there's going to be lots of opportunities there, and I think probably a lot of software maybe as a whole has bottomed out, and there's some good opportunities, but it's going to be volatile and it's going to be dicey because some of the value stocks could become value traps.
Yep. You got to watch out, and I just think of for years we had the value trap poster printout on the refrigerator, and you think of Zoom being a growth company that isn't growing. It's so much of those value traps you're just like waiting on that catalyst to come or that savior CEO to come in, and it's like, hey, that may just not be coming.
Or the new story. I mean, there was this story idea too, and like their new story is, well, you're going to have AI workflows. When you have a Zoom meeting, it's going to integrate with all your workflows, and you can actually hire people on Zoom, and it syncs with the resumes and things like that. And I think that's their vision. But again, they've got to actually go out and sell it. They've never actually had to sell a product. I mean, if you think about it, because in 2020, 2021, people were just coming to them.
It sold itself.
Yeah. And so now that's going to change.
Teams functionality too, it's so much more integrated with the business world. I mean, and I would
argue
argue that
Slack now too.
Their mode is we didn't use Teams this time. I mean, it's functionally exactly the same.
Do you think? Here's a question: what is the PE of Zoom now? Price to earnings ratio.
My guess is going to be they don't make money, and the answer is
they are profitable.
Undefined.
They are profitable.
32.
Well, in that case, I'm going to guess 132.
14.
Really?
Wow.
Yeah.
All right. Value.
So, I mean, I guess weird. Yeah, they're not overpriced, I suppose.
Yeah, I mean, I think basically the market's saying this company's
Just not
potentially
worth
on-
that much.
Yeah.
Oman and Iran seemed it like they're maybe opening the strait back up.
Yeah, there's talk of a
Well, we're letting them because we own it.
Yeah,
payment.
The Strait of
we're
America.
renaming it the Strait of America. Yeah. So the proposed framework includes establishing a temporary shared maritime corridor through the Strait of Hormuz and reaching an agreement to execute a joint project aimed at clearing and rehabilitating the strait. So we're gonna rehab this bad boy, get it back in the public.
We're gonna put the mines in there and then take the mines out.
The U.S. has to agree for this to work, but it seems like Trump would take this if they can actually reach an agreement.
Yeah, I agree. I mean,
How
It
long
would
it
help them in the
exists,
midterms.
how long the agreement lasts, I don't know. Probably, long enough to clean out the mines and then redeploy. But
it's crazy.
but oil reacting pretty sharply in a positive way.
Yeah, which is it's good news, and it's good news for bonds too, because people aren't giving Besant credit, but they are giving this news in the Middle East credit
Oman.
for bringing interest rates down, which is kind of interesting to me.
Well, there was a big headline on Bloomberg yesterday afternoon that the Besant put was putting pressure on short sellers for the 30-year Treasury as his bond buying takes effect. That was those are the exact words, except that we still know that it doesn't start till September 9th. So the idea that he's doing anything different right now is insane, good or bad. But you've got conflicting headlines now where they're like, oh, well, look, there's a top headline this morning. I just looked at it a second ago. I've moved away from it to look at the PCE data, which is coming out. But Besant bounce starts to emerge in long bond market metrics. I don't think what he's doing has anything to do with what's happening in the 30-year Treasury. Rates move in a sawtooth fashion, and I think we got a little overextended. We had a strong 2-year auction yesterday, and I think that people are like, we've maybe overdone this.
Man, what's crazy is if you do look at like a daily chart of like the 10-year or the 30-year, I have never seen more of a sawtooth than what you see right now. It's like boom, 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 boom.
The best and bounce, man. That's what they're calling it.
Yeah. Yesterday, Besant push to put. Today, Besant bounce.
He's not a bouncer.
No.
Let's all be honest. PCE. Tom, you got it. Ben, you got it. Who's got it?
So we got it. Let me go back to it. Of course.
So we're looking for a headline month over month of 0.1%, which would be a year-over-year reading of 3.6. On the core, we're looking for 0.2, which would impute a 3.3.
So we came in a little hot on the headline numbers. Month over month came in at 0.2. I'd love to see the rounding on that. And then the year over year came in at 3.7. And then the core came in line. So expectation 0.2, month over month, year 3.3. I have to really dive deep into the calculations here because, ultimately the inputs to this fell quite a bit, but we're still running inflation. But I would still argue that, CPI, which is, I would think at least 1% overestimated, is a big driver here, far more than PPI. But bonds are, they're off a little bit, but they're also up significantly over the last 2 days. So I'm not super concerned about it. I think that let's go to Twitter and see if Tim Rose has tweeted anything yet.
Oh, yeah. As expected, much hotter.
Yeah. Let's see here. Nick Timrose, 2 minutes ago, July core PCE was plus 0.25%, which annualizes to 299. This was essentially the same as July 2025, holding the 12-month change at 3.34% versus 2.86 in July of 2025. Core PCE was 3% using a 3-month annualized rate and 3.5 on a 6-month annualized basis. So he's excited.
Yeah, I do like that we talk about month over month and year over year numbers, and he says, well, let's take the last 3 and annualize that.
Yeah.
Ben, thoughts on, did we get a GDP revision?
We did. It came in the same 1.5, but there was a lot going on under the surface. Sales of goods were down versus what was it previously expected. It was previously expected to be a robust 5.2. It came in at 4.3 on the revision. Services made that up, was 2.2, now 3.1. All of that was healthcare. So that was it was a shift toward non-discretionary, I would say. If you think about it that way, on the consumer side and on the investment side, residential continues to be weak. It was revised down from 1.5 to 1.3. Not surprising on that front. I think that whether it's fuel costs, whether it's interest costs, fuel costs on the good side, interest costs on the investment side, I think that you're seeing the economy really try to grind out of like the sand trap, but it's fighting some headwinds.
We got some other company news. Do we want to hit that, Ben?
I mean, just unless you're fragrance maxing in retail, you're down.
You're toast. You're stinking.
Man, can I do Tom's Corner?
Oh, let's do it.
Man, I heard about this on a podcast. I can't believe I'd never heard of this before, but I am so excited, and I think I was annoying Ben as he was trying to prepare for the call as I was digging deep into the Wikipedia. But apparently there's a mushroom that exists in China, and this has been a known documented phenomenon in China since the 300s in the Taoist times, but it's called Lanmoawa asiatica. And apparently if you eat it and it's undercooked, 12 to 24 hours later...
Quick time out. Are we supposed to eat it?
It is a commonly eaten food in China, but if you don't cook it well enough, 12 to 24 hours later, you start to suffer from something called Lilliputian hallucinations, which is that your world is filled with tiny people harassing you. And it says that it's described as the little people associated with Lanmoawa asiatica are said to be about 2 centimeters to 10 to 30 centimeters tall, anchored in one's environment, including being stable, realistic, embedded in the environment, three-dimensional, rendered in fine detail, and generally obeying the laws of physics. And that can last 1 to 7 days. And apparently there are hospitals in China that specialize in the treatment of this because it's so common, but I had never heard this, and this is
it's wild that you get these same hallucinations.
Yeah, that it's like clockwork, like it's a known phenomenon.
If you do it again, do you get the same people?
Well, my question is, are they Chinese people? Like if I took it, would they be gringos? Like would it be little Mariettans? Like it's the most fascinating thing I've encountered in a long time, and that's what I'm fired about this morning.
We got to get some of these hicks, hook it up.
Well, apparently they're studying it at the University of Utah, so we might have to do a channel check and go to University of Utah and see if this is a real thing.
Yeah, well, I wonder if
but they don't quite know why it happens.
If
because,
TK's had any exposure to those studies.
Yeah, it doesn't have like psilocybin or any of the known hallucinogenics in it. It just is. There's something about this particular mushroom that makes you see little people, which is
and they're very annoying little people.
Yeah, and they
pester you.
Yeah, it's I have to see. There's a great description of what they do. I'm gonna have to find it real quick while you guys stall. But it says like they get in your there's known people who've described them as like jumping in their soup and coming out on their spoon. Like they submerge and then they only come back out if you dip your spoon in the
It's
the
like
soup.
a real life Honey, I Shrunk the Kids.
Yeah, they like climb on your furniture and like jump out from under doors and try and scare you. I mean, it sounds like the most insane thing that apparently is very common, but somehow I've never heard of this.
You probably can't sleep for
because they'd be poking you and stuff.
Tickling you.
So it's just this is the most insane thing I've ever heard, and I can't. I need some sort of.
You got to do it. Man.
Yeah,
I think you got to try it.
Seems like a must do at least once, but it can last up to a week. And while it's happening, apparently you feel quite intoxicated. So you're just wasted, surrounded by tiny people for up to a week.
That'd be a long week, man.
So, what a world we live in, huh?
I feel like it could be kind of heartbreaking too, because I mean, I'm sure they're incredibly annoying, but eventually, at some point, maybe day 4 or 5, there's something endearing about them, and then you get to day 7, and they're just gone,
like a little Stockholm syndrome.
Yeah.
All right, we'll wrap it up on that note. Do your own due diligence, folks. Talk to you soon.